What's up, everybody? Today we're looking at APHA, APHA. In front of you, I have a weekly chart. Today we saw something a little unusual, though. Let's go to the options. At Masters in Trading, we follow unusual options activity pretty closely. So we're looking at APHA. They have their earnings August 1st. So we want to be in the August expiration. And if we look at volume and open interest, we see today volume 2,500. 2,500 on the 6 strike puts. Now, if APHA, APHA, is under 6 at expiration, whoever is long these, and let's say they're long 2,500 options, that's going to be the equivalent of being short 250,000 shares of stock. 250,000 shares of stock is a pretty good amount considering we're midday and the stock's traded 1.8 million. That's going to be unusual options activity. We see there's no open interest on that strike, so we know it's definitely not covering because nobody owns 2,500, so that would be covering, and then tomorrow that would go down to 0. This is a new trade. If we go down in Thinkorswim, so in Thinkorswim, I'm just going to go here to this beaker. Let's only look at the puts, and let's only look at that August and those 6 strikes. So 6 strike right here. Here is the bulk of the order, right? I mean, I guess there's some more down here. But I'm thinking that at 918, that was really the bulk of the order. And even though this doesn't show them all, I'm guessing that's all of them. What can we learn? The market at the time was 45-cent bid at 60. We know the delta, the IV, almost 100% IV. We know what the underlying was trading. The underlying is pretty much right at this level. I would say they definitely bought them. The reason they definitely bought them is because the IV, pretty much 100%, but the IV is really about 74%. Even right now, the stock was at 598. Now it's at 602. They bought for 60 cents. They paid up for these. They really wanted to get short. Here's another way that I can confirm that this actually was an order to buy puts. So if we go to time and sales, APHA, instead of a weekly, I have you now on a 1 minute. You'll notice that right around this time is when the order took place. So the customer was buying 2,500 puts for 60 cents. The market makers were selling those puts. When the market makers sold puts, they found themselves long deltas, which is long stock. Market makers had to sell the stock, and that's why the stock continued to fall as they were placing the order. Once they were done, it rallied, fell back a little bit. Doesn't really matter, but in my opinion, that trade was absolutely buying. It was buying puts. It's bearish, probably a bearish play going into earnings. Follow unusual options activity, guys. You can learn a lot. You want to learn more? Email me, support@Masters in Trading. Introduce yourself. Love to work with you. My name is Jonathan Rose. I'm the owner, Masters in Trading.